Good morning. This is a special Friday late night edition because I'll be busy on Saturday. It's September 1st. It's the Wall Street Weekly Wrap Up with your host, John Newquist. And it was an end of an interesting month. Most of the indexes lost a little bit in the month of August, but some stocks did well. I want to talk about the Chinese ETFs because China stocks are having problems. China is having problems. Youth unemployment's high. The ETFs are a lot of times multi-year lows, and we're coming close. I mean, there's a point where you start thinking, when do you get to start buying a China stock ETF? Again, balanced basket of stocks. ASHR is what I call it. Everything's in the downtrend. KBA, another China ETF, another multi-year low you can see. And you start thinking maybe it's going to be a point where we want to buy. I would think you wouldn't want to wait too much more because this is, a low. I mean, you're talking possibly 100% return if it gets up there and moves. But we got to see something move first from China. That's what we're waiting for. What will move first? Stats of the week. Well, here it is. It's nothing but oil. A couple other things. Is like oil has been sat there and gone around this number about 84, 83 for a while, and it finally broke up to a high above the peak. So now we're in an uptrend, and that's an interesting. So this is where the oil bulls are talking $100 oil, and I think it can happen. I mean, we got another resistance up here, and we got another resistance up here, but we're looking good. U.S. demand is pumping out 12 million barrels a day. Saudis have cut 2 million. It's a recipe for higher oil. And, so not good. Not a good situation. The indexes, as you can see, remember we were at 37% up at the NASDAQ, so we've taken a haircut on the NASDAQ. But, again, we're waiting for the recession and some kind of correction, which we haven't had. Even August was as bad as it was. Wasn't as bad as it could have been. The one that I look at is sugar. Look at this commodity. I mean, it broke a multi-year high over here. And again, another thing that, is it going to go up higher? Who knows? Once it gets a shortage, people do need sugar. I mean, you can't use everything with high fructose corn syrup, but sugar is going to be out there, and we're all watching it. So this is an area that's going to be affecting a lot of people, from anywhere that makes cereals to cookies to bakery items. Walmart, one of our portfolio stocks, all-time high. I'll say that again, all-time high. At the end of all the retail earnings the last 3 weeks, Walmart is the best. They don't talk about shrinkage, but the earnings are there. And as they said, people are going there. I'm surprised that dollar stores are having such problems. But, it's not $1 anymore. And all of a sudden people say, it's probably better to go buy it at Walmart. Unemployment came out this week, jumped to 3.8. It was 3.5. And again, Broadcom, which I never understood why they changed the symbol. I remember Broadcom, BRCM forever. And then they changed it to AVGO, and I just don't like it. But again, playing up, we were an AI play. And it jumped. It jumped a lot when the quarter came out. But that's what I call AI hopefulness. Not real life AI. Did they incorporate AI and maximize revenues from it? No. They just talk about it. So it's been going flat since the summer, and revenues only went up 11%. That's not good. Microsoft is the bear. You got to beat Microsoft's 8% before we even look at you in tech. And the CRM, who did a little bit better on it, who talks about, we have a CRM, software for customer management, everything else, it's AI, and it's, to me, it's the same. But I don't use CRM software, so I can't really say or notice any difference in it. But, it jumped at the earnings over here, came up with 12-inch, revenues were good. It's not bad. I mean, this has been a hot, volatile stock. I mean, if we go back up here, you're talking almost 30% jump since the March, when it sold off quite a bit. So we're in a channel right now. Watch which way it breaks. That's what you want to do with these stocks. And going to be a short program today. Not that it isn't, but the earning, juggernauts are all over now. The thing that just jumps at me is the average new car price, $46,000. Only 6% of the cars are under $30,000 now. New cars. The average person who's paying a new car payment is paying $700 a month for 7 years. Wow, and you know that it's not 0% interest. It is high. And I'm hearing horror stories of people trying to buy used cars, and somebody was trying to sell a Camry with 300,000 miles that was 5-7 years old, which I was trying to think, wait a minute, how do you get that many miles on a Camry? You must be driving it nonstop. But they wanted like $7,000 and offering 4-year payment plan. I says, man, you won't even make it 4 years with that kind of a car. I mean, 300,000 miles, that's mind-boggling. So it's going to come to the head. Remember, we're going to cut back spending. As Costco said, steak is going to chicken. Walmart, people are buying the Walmart brands. They're not buying the main man products. We're starting to see people cut back. And that's what we're going to see on used cars. Eventually there's a gut. I keep on going by Carmack and Hillside, and CarMax is full. Every car is over 20 grand now. Every car. So sooner or later, something's going to break. People can't buy it. They're going to be buying it somewhere, and we're going to see probably March cars at 30%, 40% discounts. So if you can hold out, and that's a big if, that's where it's going to be cheaper. Otherwise, have a good Labor Day. Enjoy the week, and I'll see you next Saturday.